Hey, this is Tim, licensed loan officer, MLS number 1866731. Thank you so much for watching. Today we have an exciting video. We're going to talk about mortgage rates. I'm going to tell you everything you need to know about mortgage rates, how to get the best rate, how our interest rate determined, what you can do to improve your chances of getting a great rate, and all that good stuff. So people have been trained to only focus on an interest rate. And that's why I'm making this video, to educate you and give you the information about mortgage rates. So without further ado, let's get into it. All right, so let's go. So I titled this the ABCs of mortgage rates, because ABC, just the basics. So how do I know if I'm getting the best rate? And this is a concern for a lot of first-time home buyers. They don't know if they're getting the best rate. They don't know if they're getting taken advantage of, and they're just kind of worried. You know, this is not their field. They don't do this every day. So that's why I want to tell you, mortgage rates are all over the internet, okay? They're on Google. They're on Bankrate and Credit Karma. They're on like Rocket. So you can go to Rocket. Rocket Mortgage is one of the largest lenders. You could go there and look at their rates. They're also on this site here called Mortgage Daily Rates. And what Mortgage Daily Rate does right here is that it shows you the average rate across the country. And you also could just check with another lender. And I always recommend that anyway. It's always a good idea to get a second opinion, because some lenders have different programs, different guidelines, and different interest rates. So I'm going to quickly just show you real quick how this works. So you find a home, you put in your offer is accepted, and now it's time to sign your loan documents, and then you can see what your real mortgage rate is. Now, this is the time is when you kind of want to shop. You don't want to shop at the pre-approval stage, because interest rates will change every day, and whatever interest rate they had at that time won't be the same rate when you find a home. So as soon as you find a home, and if you're concerned about getting the best rate, that's the time. And remember, you do have usually 30 days to close on your loan. So 30 days to get your financing closed. So that's when you want to look for your rate. But all you would do is go here to Google, as you see, I already did it. And then you would type in mortgage rates on Google. And if you do that, a bunch of stuff is going to come up here. Some news, like some ads here. These are ads. But right here is what I want to show you. You're going to get the average rate. And then you could even be more detailed by putting in the loan amount, putting in your down payment, your state, and then your credit score. Now, remember, Google's not 100% accurate, but it's going to give you a good ballpark, okay? That's all you want, is a ballpark. And if you're off by a little bit, you know, maybe 0.5 or higher or lower, then you're right in that ballpark. But this is just to make sure that you're not getting taken advantage of. Now, another thing you could do too is just type in Rocket Mortgage here. You see I put Rocket Mortgage. And look at the first thing that shows up. The first thing that shows up is rates. So you could just click on rates here. And this is all just to make sure you're getting the best deal, or to see if you can get a better rate. Now, if you go here, you got to decide whether it's a purchase or refinance. So we're going to do purchase, because most people are purchasing their home. And at the time recording this, looks like they have a 7.25. That's the actual interest rate, and that calculates your payment. And then an APR. An APR stands for annual percentage yield. The APR is the total cost of financing, because what happens is that when you buy a home, you do pay closing costs. So the APR factors in your closing costs. So your APR, what you actually pay on an annual basis, annual APR, which you're basically the total cost of financing. That's what your APR is. Some people get that confused. So the interest rate calculates your payment, and what you actually pay. The APR lets you know if they're charging too much cost. So usually you want the APR kind of close. As you see here, the rate is 7.25 and the APR is 7.573. And then it shows discount points. And what discount points means is that a lender can give you a rate, and then some of those rates, like the lower rates, come with points. And a discount point means you're just kind of paying prepaid interest. So you're paying a little bit more money up front to lock in that lower rate for 30 years. Now, you want to be careful not to pay too many discount points, because what happens, you won't break even. So as example is you pay extra $1,000 in discount points, or this is here $5,000, but most of the time a discount point could be $1,000, $2,000, maybe $3,000. That's a little high, but it really varies. But a rate is that you're paying a point, or you're paying a little bit of discount points to lock in a lower rate. So some lenders will quote you a lower rate, but they're charging you points, so that rate is not free. So just be conscious of that. And then it has different terms and different programs. As you see, the VA here is 6.8, and this, if you just see 30-year fix, assume that's a 30-year conventional fix. And if it says 30-year FHA, then that's a FHA. So there are different programs and things like that. And then it just talks about discount points. Now, some lenders will hide the discount points under the disclosures. See this down here? These are, always read the small print. And the small print sometimes is really misleading, because they say, hey, this rate is based on a 740 credit, or this rate is based on 20% down payment. But you can actually get a lot of information just by going online without having to call a lender. Now, back in the day, you would have to call a lender, but now you don't have to call around. You just hop around different sites, Google, you can figure that out. Now, let's get back into the presentation here. And I want to talk about the factors that affect interest rates, okay? And what impacts mortgage rates, what impacts mortgage rate is, first, the economy. So the economy plays a fact. Now, the better the economy is, usually rates are a little bit higher if the economy is, really strong. But if the economy is kind of low, usually interest rates go down a little bit. And then inflation, that's something we're dealing with now, inflation. So when inflation is high, that just means there's a lot of money in the market chasing very few goods, and that rises inflation. And what they do, the Federal Reserve does, is they make the cost of money higher. So that's what we've seen the last few years, is that they raise interest rates to kind of slow down inflation, because they're trying to take money out of the market. So that, and then of course, like I said, the Federal Reserve, and then your credit score, your term. Generally speaking, shorter terms carry better rates. And what I mean by shorter term is usually a 20-year or 15-year. Now, there are 30 years, there's 25-year terms, and there's 20 years, 15 years, and then 10-year terms. So there's all types of terms. But I recommend, if you, as a first-time home buyer, maybe a 20-year term. A 15-year term is really aggressive. But just get the 30-year. That's the most popular one. And then later on, you can always refinance to a 15-year if you want to shave off some years and pay the home off quicker. And then the type of mortgage. Is it a conventional? Is it a FHA? Is it a VA, USDA? There's so many programs, in-house products, non-QM. There's so many different products. But those are the main things that impact mortgage rates. Now, you can't control the economy. You can't control inflation. You can't control the Federal Reserve, but you can control somewhat the type of mortgage, the term, and your credit score. So keep that in mind. So how can you secure the best mortgage rate? And one of the easiest ways to secure a low and good interest rate would be improve your credit. Credit's a big factor. The lower your credit is, the higher risk you are from a lender standpoint. The higher your credit is, you're a low risk point. So if you're low risk, they feel more comfortable giving you a lower interest rate and lower fees and the best loan program.
Hell yeah.
And one of the best loan programs would be a conventional mortgage. But FHA is a great program. FHA does have lower rates, so I'm not, getting, criticized if you get FHA, but the better program is the conventional. And so that's something you can do, is work on your credit if you want a lower rate, and it's going to save you money. It's going to help you build equity faster. Having a lower interest rate means more money goes towards principal. You pay down your outstanding balance faster. And on the back end, you're building more equity by having a lower rate. So sometimes it's worth it to have good credit and really work on your credit.
Yes.
And what we consider good credit is a 670 or higher. So 670 or higher is considered, good credit. So, okay. So let's see what else you can do. And another way to secure the best mortgage rate is a larger down payment. So again, if you put more money down, that shows the lender you're less risky. Now we call that loan to value. Now for a first-time home buyer, never bought a home before, usually the down payment is anywhere from 3% to 3.5%. But if you put 5% down, that's better. 10% down, that's even better. Or 20% down. Now, there is a myth. A lot of people think they have to put 20% down, but that's not the case. 20% down is for someone that doesn't want to pay mortgage insurance, or someone that's maybe selling a home and has a lot of cash and want to put 20% down. But I've seen that a lot of times 10% down gets you a lot better rate than putting a 5% down. So if you own a home, usually the down payment would be like 5%. So there are different down payments, but generally speaking, to get a better mortgage rate, a larger down payment, because a larger down payment means the lower the loan amount will be, and the lender likes that. So if the lender is going to give you 80%, you're going to put 20% into it, lenders love that. If you're going to put 10% and the lender is going to do 90%, they love that. So that will help you put in a larger down payment. So sometimes it can be worth it to save a little extra to have a larger down payment to get a better interest rate, which is going to save you money and give you a lower payment too. So what's another way to help you secure the best mortgage rate? Another way would be a shorter term. And as I speak about shorter terms, usually the 30-year term and the 25-year term, there's not much of a difference. But a 20-year term, you're going to see a slight bump in the lower rate. And then, of course, the 15-year term has really good rates. Everyone loves 15-year mortgages. But to consider with a shorter term is are you comfortable with that payment? Does it meet your budget? Now, don't do a 15-year just because the rate's lower, but the payment you're not comfortable with. In that case, do a 30-year. And with the 30-year, you can always pay extra. But again, if you're looking for a little bit lower rate and you can take on a little higher payment, then I would consider maybe the 20-year. But again, if that's, like I said, some people will go, it's so crazy on the rate, they're getting a 15-year with a lower rate, but the payment's so high. Okay, and then that's not really helping you. You need some money to save. You need money for a little bit repairs, other things, your lifestyle. But like I said, generally speaking, the shorter term will give you the lowest rate. And what I recommend is getting a 30-year, pay a little extra, and maybe in a couple of years, you can always refinance to a 20-year, refinance to a 15-year. That's the good thing about a mortgage. You can customize it. You're not stuck with it. So, but to get a good rate, consider a shorter term. And another way you can secure the best rate is to lock your rate.
Yes.
Now let's talk about a rate lock. So what a rate lock is that you find your home, or let's say you're refinancing, whatever, you can lock your rate in, and you can lock your rate for 15 days. It's more common to lock your rate for 30 days, 45 days. And what that means is as long as you close your loan within the rate lock, that rate is guaranteed to you, because rates do change daily, slightly up and down based on the news, economy, and things like that. But if you find a good rate, if a lender tells you about a good rate, lock it, okay? Don't say I'll call you back. Don't say I'll think about it. You want to lock your interest rate. Now, sometimes if you're working with a good loan officer like me, I may say, hey, I think the rates are high today. I think we should float the rate. And then when the rates do drop, we'll lock it. So timing plays a factor. But if you find a good rate, or if you're happy with the payment, you're happy with everything, lock it. Lock it. Give that lender everything they need and close on time, okay? That's my best advice. So if everything looks good with the payment, loan type, the home, lock your interest rate, give the lender all your documents, and then close on time, and you'll get that interest rate. And then another way to help you secure the best mortgage rate, I would say, is shop around. Now, a lot of people do not want to shop. A lot of people are afraid that if multiple lenders run their credit's going to go down. And I'm here to let you know that usually a hard inquiry only makes your credit go down 5 to 10 points. That's it. 5 to 10 points. And I have a lot of hard inquiries on my credit. Not that I'm constantly applying for credit. It's just, you have good credit, you want to use it. But shopping around, and when anybody's shopping around, is mean calling up one other lender, and telling that lender your situation and letting them run your credit and let them quote you a rate. Some lenders can quote you rates on just questions, but to get the most accurate information, they need to see, your credit. And so many people are afraid that if more lenders run their credit's going to go down. And I'm telling you that hard inquiries will never take you from good to bad or excellent to good. So shopping around has shown that it saves people anywhere from $1,500 to $2,000. So you're either going to get a lower rate or a lower cost. And ask for something called a loan estimate, okay? A loan estimate. And a loan estimate is a standard document that all lenders have, and you can compare these two loan estimates next to each other, and they help you read it. And also ask a friend, a family member, someone you know, maybe me, hey, check this out. What do you think, Tim? Because this is a big decision, and talking to different lenders, sometimes you're going to get a lower rate, or you may get a higher rate, and now you know your first lender is giving you a good deal. So it doesn't hurt to shop. And we shop for everything else. Like if you're going to buy a car, you go to different dealerships. If you're buying a new cell phone, you go to different sites, maybe the store. But sometimes when it comes to mortgages, people feel like they can't shop. But I've seen the opposite, where people just keep shopping. And when they keep shopping, now they're wasting time and they may not close on time. So you have to figure that out too. But yeah, talking to 1 or 2 lenders or 3 lenders max, I think is a good idea and can help you save some money. And I want to recap this real quick here. This is a recap on how to secure the best mortgage rate. Now, the biggest thing that you can do and the biggest thing that you can control is your credit. Improve your credit. The next biggest thing you can control is a larger down payment. And then you can control the term. And then you can shop around a little bit, talk to different lenders, and then lock your rate. So that's how you get a great rate. Improve credit, larger down payment, shorter term, shop around, and then lock it in. And I want to let you know too that I'm here to help you. So you can always drop me a comment, always send me an email. I'm licensed in a few different states. I'm not licensed in all 50 states. But again, my job is to help you and give back. So thanks so much for watching. I really appreciate it. I hope you learned a lot about mortgage rates, how to get the best rate, things that affect rates. But again, if you have questions with rates, below. Also, if you like this channel and if you want to learn more about real estate and how to get best deals or be an investor or buy a second home or improve your credit or build wealth, consider subscribing to this channel. I'd love to have you. Thanks so much, and I'll see you again in the next video. Thank you.
Hell yeah!